everyone, welcome to the Stock Market Morning Prep video for Friday, September 11th. Well, we are continually seeing a lot of chop, a lot of volatility intraday. Market sold off yet again at the end of the day, losing most of its gains from Thursday. So Friday is always a little tricky, right? We are back to work, everybody's back to school, summer's over, but Friday usually is a very tricky day for the end of the week for the S&P. Don't know why, but usually there's a dry up of liquidity, and markets get to be kind of a wild ride during the course of the trading day. Next week we have the Fed announcement about rates. I believe it's on the 16th. Next week's going to be a very interesting week, to say the least. I think there's going to be a very large pickup in volatility, and I'm looking for the market to head lower. I mentioned that the last few videos that I'm looking for market of testing the September lows and then the August 24th low in the next 4 to 6 weeks. And it just continually showing me that there's evidence that markets are being sold into on every little pop there is. Sellers are out and in abundance. So we need to really keep that in mind. For the longer term investor, swing trader, I would not be looking to add to any type of move higher. Be looking to let the market stabilize. We have market divergence upon us. All of the indices that we show you are down, obviously, and are making low lows, low highs, but some of them are showing bull flags, some of them are showing symmetrical triangles. So nonetheless, what it's really telling me that we're pausing for the next move, and I think that's going to be the Fed, when the Fed does going forward. Okay, so I'm just going to look at some of the charts. A lot of the momentum indicators have stalled at the lower levels. The McClellan oscillator, the NYMO, great indicator, is back to neutral. So that's given us a neutral stance to say that this market really now can either test the upper end of resistance or break down from this level here. And you can see that spiders here on the daily chart. A lot of the moves that we've been happening after the September 24th, just right now, kind of creating this symmetrical triangle on a 60-minute chart. And I just want to show you. Here's the diamonds. Not to skip over a lot of the other indices, but you can see here we're just kind of getting closer and closer into that apex, which I think that the next couple of days will put us right about here, and that's where I think the markets are either going to break down. I think the risk is to the downside, but I would love to see the market pop up and get right up into this area where we can look to short the market. So here you have a 50-50 chance. I mean, if you're trading during the day, it's one thing, but if you're looking to take a position for the next move, I would let the market tell you where the next move is going to be. Right now, really no one knows, but there is a lot of evidence that the markets are headed lower, at least to this low here, and then of course the August 24th low. All right, but that's a 60-minute chart. They pretty much all look the same. However you want to draw it, spiders looks like more of a descending triangle, a bear flag. You could draw whatever you want, but the bottom line is they're all bearish patterns here. This symmetrical triangle is really just a continuation pattern from this area here, and should break lower. Okay, so I just wanted to show that to you. Here's the spiders. We were looking at the S&P ETF. As you can see, we have a bear flag which broke down yesterday, closed barely back above it. We're down now about 5.5 handles. So any kind of gains continually are getting sold into. So just keep that in mind, guys. Russell, next, our leader here. I mentioned that we had a bull flag here, and I wanted to show this to you here. And here you can see that. I'm going to take that away right now because that bull flag did materialize and turned into now a bear flag. So we have now a bearish pattern into resistance band here that I show you, and we haven't even broken above the 38% retracement, Fibonacci retracement. Not a good sign. Usually we get a little bit of momentum, we can get back higher. This can't even break back above the 116.5. So again, secondary leader here. This is a very big sign that the markets are taking a risk off type attitude. Okay, Russell 2000, and I mentioned many times, usually tops before the other indices do. Okay, so just keep that in mind as well. Transports here, nice big symmetrical triangle. However you want to, you could draw even a small little uptrend line here. I'm just taking this as a break lower and out of this band and below this downtrend line here. we're going to look to probably re-short. Now remember, there are some sectors that are coming into some seasonal strength, but I'd like to see the market take it down, right back down in here, maybe even lower, and then we start looking to gobble up some of the long plays. And for the longer term trader, I would say let's wait for that move, and you can add to your positions. Okay, so downside targets on the S&P, probably looking at anywhere from the extreme low of 1776 to like 1820 in the S&P. Now, does that mean it gets there right away? No, of course not. These are just a little bit more extreme downside targets. Once we get moving to the downside again, I'll put some projections out there for you guys. Diamonds, you can see another symmetrical triangle. That's pretty much in bad shape. When we went to the 50% Fibonacci retracement, we're still looking to at least test this low here, the August 2nd low. August 2nd low here, and or the August 24th low. Okay, so this right now we're in this horizontal channel, if you will, and then symmetrical triangle. We need to break out and break down, and then looks like more than likely we will test this again, and then probably get down to this area here. Need a big catalyst. Right now, Apple wasn't such a big catalyst the last couple of days, although it did rally up yesterday. Right here on the Qs, you could see a nice symmetrical, identified symmetrical triangle. We rallied back almost 76% on the Fibonacci retracement area, which is nice. You can see that does have some momentum, but on the next downward spiral lower, make yourself a little bit of a grocery list, because technology usually comes into favor between now and the end of, say, October, November, along with some other key sectors that we're going to be following. Okay? Hope that helps, guys. Have a great day. Enjoy the weekend. Next week is going to be really fun, and it will be wild, so get a lot of rest over the weekend. Take care, everyone.